Hi everyone and welcome back to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Thursday the 3rd of April. I'm going to move on to dollar yen now, and dollar yen continues on its move higher. Having broken above that 103.75 level, the breakout does suggest that there's very little resistance now really between that and 104.83, which was the high back on the 23rd of January. The momentum indicators all remain very strong. The RSI has further upside potential to go. It's only around 65, 66 level. It has been significantly higher than that in previous moves higher. And the MACD lines are increasingly positive. You could argue that the stochastics are coming into overbought territory, but that I think is just a sign of strength in this chart. And the outlook remains very strong. The only thing I would start to think about is the fact that the last few days the daily range has been narrowing slightly. The initial breakout had a 96 pip range. A few days ago we were up at 68, then Monday 65, yesterday 37. So the daily ranges are getting tighter, which may suggest that the move is beginning to arguably run out of steam, and I think I'll show you on this intraday chart that may be the case as well. You've first of all, I would say that you've had this this ascending triangle in place, that you've hit the target. The target was 103.95. You've hit that target now, so that pattern now becomes more historic. You've got this uptrend in place. That's still a good uptrend and holding on. You're also holding on to this rising 21 hour moving average, and dips continue to be bought into. And whilst I would also stress, whilst whilst dollar yen continues to find higher lows on the daily chart, the outlook remains strong, and 103.56 was yesterday's daily low, and whilst that support remains intact, and the dollar yen continues to make these higher lows, then you'd still be buying into corrections. That's a fairly simple outlook. The momentum indicators are in positive configuration, RSI and MACD, although I would also stress that they don't look as positive as they did a couple of days ago, and perhaps now with this stochastics falling over, maybe are suggesting another correction is due. That might give an opportunity to buy at a lower level. You've got a nice band of support between 103.70 is a fairly decent band of support with highs and lows also between there, and current levels around 103.90, so between 103.70 to 90, I think that's a fairly decent basis of support. As I said, that 103.56 level I think is going to be now indicative of a possible end of this run higher, so just watch out for that. As I said earlier, the outlook remains very positive on this chart, moving towards 104.83. There's no real reason why it shouldn't move there at the moment, but the strength of this run higher is beginning to arguably run out of a little bit of steam, although it does still remain in positive territory on these momentum indicators. Just the early signs of a potential calming down of this run higher. Anyway, I wish you good luck in your trading on dollar yen today, and I will speak to you later. Thank you.